Hi, it's Jeff Nunley from Evergreen Pacific Mortgage. Welcome to our Wednesday morning inaugural broadcast on video here. We wanted to bring you a little update, a little different and special way today if we could, because we think it's important that that you pay attention to what's happening in the mortgage market. Now, it's no secret that the mortgage industry has been really battered all over the world, not just in this country, but really all over the world, and that certain things have gone away. Loans we call subprime. A year ago, nobody knew what a subprime loan was, and now we hear about the subprime write-downs on a daily basis. So it's amazing how when things go terribly wrong in a certain part of our market, that that the media picks up on that and wants to make sure that we hear all the bad news. So what we want to do is we want to fill you in on what's happening in the market here in just a quick, brief email, and at the same time let you know where the opportunities lie so that you can maybe take advantage of them. We want to make sure you know that that there is truly opportunity in this market. Now, for the bad news, as we've heard nationally, real estate prices are heading down. There's a record number of foreclosures. Now, in terms of percentages, we want to make sure you fully understand what that means. Right now, 4.5% of all home loans are in any state of foreclosure. This is far different than what we hear in the media. The media would have you believe that the guy across the street and on either side of you are all losing their homes right now. Simply not the case. 4.5% is way above our normal tolerance level. We certainly don't want to see the values drop on those homes. We certainly don't want to see people lose their homes at that level. So it's above tolerance levels. The government, of course, and the markets are doing everything they can to renegotiate contracts. We can now do something called modify a home loan, something a year and a half ago a lender would have never considered. So there's some things that are going in the right direction, but it's going to take time. Now, just this morning, Credit Suisse pointed out that they think that by next year we're going to have a recovery. And believe it or not, D.R. Horton and some of the other home builders' stock prices as of this morning are up 7 to 9%. So it's pretty amazing to see these changes occurring in the market so quickly. Now, in terms of the mortgage industry itself, boy, talk about a lesser number of products available in the marketplace. A year ago, somebody didn't have to prove their income to qualify for a home loan. Now, technically, there are products out there where you can go 75% with really good credit scores and still not have to verify your income. This is important because business owners and people who take legitimate tax deductions and do live on more than they make ought to have the opportunity to still be able to refinance. So those products are available. They're fewer in number, they're harder to get, but they are still out there. They have not completely gone away. In terms of other products, for the first time we've seen credit really enter the home arena, the home mortgage arena. It used to be somebody could have a 620 credit score, and if they got an approval on the automated system, they got the same approval and the same interest rate as someone who had a 750 or even 800 credit score. That's changed. We have now tiered the loan to value, the value of the home against the loan amount, and the credit score in such a way that now, with a lower credit score, you will pay a much higher interest rate on a home loan than somebody with a really good credit score. Now, this is important to understand. There is plenty of money available for people with good credit or people with good credit scores, but it's gotten more expensive on the lower end. If you are concerned at all about what your credit scores look like, or you think you need a touch up on those to try and maximize them, there are things that we can do here at the office that we can put you on the right track. We have companies we work with. We have tips, tools, and techniques to help you improve your credit scores. So if you're thinking about buying, selling a home, or doing anything with credit, and that credit score needs to be improved, give us a call. We can probably help. So that's important. Now, another thing that's really changed in the market is FHA. The FHA product itself hasn't changed, but what has changed is the number of FHA loans that are occurring and the amount we can lend money to. Last year and prior years, nationally, FHA only made up 5% of all home loans in the marketplace. Currently, that number is as high as 65% in many markets, and it's literally 50% of our business right now. We've been doing FHA since 1992. It's always been an important part of our business. But right now, companies all over the country are scrambling to get on the FHA bandwagon and learn exactly how to do the loan, how to set it up, because it is different from other financing. So we want to make sure that people are taking full advantage of this great product. Now, some of the advantages to FHA is that it allows as little as 3% down on a purchase. It'll do up to 95% cash out. So if somebody is in a adjustable rate mortgage or an 80-20 combo, one of those subprime loans that somebody did with no money down, we can go up to 95% now of the value of the home and get them out of that loan and into permanent financing. Another, probably even more important feature is in our local market here in the Eugene area, we've gone up to $343,750, all the way up from only $260,000 at the beginning of this year. So a tremendous increase in the size of the loan, and that's really adding to the number of loans that we're capable of doing. So FHA is becoming exceedingly important for both purchase and refinances. Some people would argue it's actually what's really holding up the market at this point. So it's a really exciting time for us. Believe it or not, we're staying very busy. I think there's a lot of other lenders now have left the market. We're hearing numbers in Oregon, as much as a third of the loan officers that were out there doing business just a year and a half ago are gone now. And business is down 20 to 25%. So technically, we're actually seeing a net increase in business per loan officer. So we're staying busy. The advantage is not everybody is. So our turn times are down. We're able to get appraisers out to see properties in a hurry. And, it's a more difficult time. But I think we're going to get through it. And I think that we're going to see our clients benefit as a result. Now, one last thing before I let you go here, keep in mind that when property values are down, when people are selling, when people are listing properties and they're not getting sold, when adjustable rate mortgages are wreaking havoc on the market, this is a great time for somebody who is interested in doing any sort of investing to get ready to do it. May not be time to pull the trigger, but we're really close. So if you've ever thought you wanted to own some real estate, if you've ever thought whether it's rentals or you want to invest in commercial, now is a tremendous opportunity to buy a property that's currently out of favor, an asset that's currently out of favor, that can lead you a long way toward building that financial security long term. I've talked about adding real estate to portfolios for years as a retirement strategy. I understand that rentals aren't for everybody, but you can run out of money in a 401k plan. You can run out of money in your savings account. It's very, very hard to run out of rents. And with real estate appreciating in a tax-favored way, faster than the rate of inflation, it's going to become even more important now, because those rents, not only do you not run out of them, but they're also indexed to inflation over the long term. And there's a lot more people out there right now who are looking to buy real estate. So it's a great opportunity for you or somebody to take advantage of that. And we have some great products available. So I'm going to leave you with that. I want you to be thinking of all the things that we've talked about here, and any questions that you have, please don't hesitate to give us a call here at Evergreen. Give me a call. I'm more than happy to make myself available for you or your family members who want to discuss things further. So I appreciate your time today. I'm very excited about this new video series that we're putting out. We're going to start doing these every 2-3 weeks as we have something important to talk about. So we look forward to talking to you soon, and give me a call. I look forward to talking to you as well. Thanks.